Think you're breaking even with your gambling? Not so fast. In some states, you could owe thousands in taxes even if you didn't profit a dime. Let's uncover the shocking truth about how casual gamblers are getting hit where it hurts, their wallets. Here's a scenario that might make you do a double take. You just won $10,000 at the casino. Congratulations. Now get ready to pay taxes on all of it, even if you lost $10,000 right after. Sound crazy? It's the reality in some states where casual gamblers are required to pay taxes on all their winnings, regardless of their losses. Think about it. You could walk away from the tables without a penny more than you started with, but Uncle Sam still wants his cut. By the end of this video, you'll know which states to avoid if you're a casual gambler and how to protect your winnings from unfair taxation. Ready to beat the house and the taxman? Let's get started. Let's dive deeper into this tax nightmare. Did you know there's a list of states where breaking even in gambling could still leave you thousands of dollars in debt to the taxman? It's a hidden trap that's catching countless casual gamblers off guard. Here's where things get really unfair. Some states have tax codes that don't allow amateur gamblers to deduct their losses. This means you're taxed on your total winnings, even if you've actually broken even or lost money overall. It's like paying taxes on money you never actually had in your pocket. So, which states are the culprits? Brace yourself for this list: Connecticut, Illinois, Indiana, Kansas, Massachusetts, Michigan, North Carolina, Ohio, Rhode Island, West Virginia, and Wisconsin. If you live in one of these states and enjoy the occasional flutter, you might want to think twice before placing that bet. Let's break this down with a real-world example. Imagine you're in Wisconsin and you hit a lucky streak, winning $50,000 at the casino. Fantastic, right? But then Lady Luck turns her back on you and you lose $50,000 before the year is out. You'd think you're back to square one. No harm done. Wrong. In Wisconsin, you still owe taxes on the full $50,000 of winnings. That's thousands of dollars in taxes on money that, in reality, you never got to keep. This state-level treatment is in stark contrast to federal tax law. The IRS actually allows you to deduct your gambling losses up to the amount of your winnings. So while Uncle Sam might cut you some slack, your state could be reaching deep into your pockets. Now, you might be wondering, how do I know if my state has these unfavorable gambling tax laws? Here's a quick tip. Check if your state allows deductions for gambling losses. If it doesn't, you're likely in one of those states where casual gambling could lead to a hefty tax bill, even if you break even. Think you're stuck paying taxes on phantom winnings? Not so fast. There's a little-known category of gamblers who play by different rules when it comes to taxes. But before you get excited, let me warn you. The IRS isn't handing out get-out-of-tax-free cards to just anyone. Enter the world of professional gamblers. These aren't your average weekend warriors at the slots. We're talking about people who treat gambling as their full-time job. The Supreme Court has set a high bar for this status. You need to be pursuing gambling full-time, in good faith, and with regularity to earn income. Sounds simple, right? Well, the IRS isn't so easily convinced. Tax agencies use a 9-factor test to determine if you qualify as a professional gambler. They look at things like how you carry out your gambling activities and your history of income or losses. It's not just about winning big once in a while. You need to show that gambling is your legitimate profession. Here's where it gets interesting. Professional gamblers report their winnings and losses on Schedule C, just like any other business. This allows them to net all their wagering activity and even deduct ordinary business expenses. In some cases, if their business expenses exceed their net gambling winnings, they can report a business loss that may offset other income. But don't think you can just declare yourself a professional gambler and call it a day. State tax agencies are ready to challenge your status aggressively. It's a high-stakes game with the IRS, and not everyone qualifies to play. So, what about the rest of us casual gamblers? Don't worry, there are still strategies to protect your winnings. First and foremost, keep meticulous records. Track every gambling session, including the date, type of wager, location, and amounts won or lost. A basic gambling session is defined as a continuous period of play without cashing out, and shouldn't exceed 1 day for tracking purposes. Document everything. hold on to those W-2G forms, losing tickets, and even travel records. If you're dealing with significant gambling activity, consider getting professional tax help. They can guide you through using Form 1040 for reporting winnings and Schedule A for itemizing deductions. Here's a bonus tip that could save you hours of stress during tax season. Create a simple system for tracking your gambling activities. Use a spreadsheet or a dedicated app to log your sessions as they happen. It's much easier than trying to piece everything together from memory when tax time rolls around. Remember, while these strategies can help, they don't change the fundamental unfairness of some state tax codes. You might still end up paying taxes on winnings even if you've broken even or lost overall. But by keeping detailed records and understanding your tax obligations, you can at least ensure you're not paying more than you absolutely have to. Let's recap the key points here. Some states have tax codes that are downright unfair to casual gamblers. You could end up owing thousands in taxes even if you didn't make a profit. Crazy, right? Now, professional gamblers play by different rules, but don't think you can just declare yourself one and call it a day. The IRS isn't easily fooled. So, what's your action plan? First, check your state's gambling tax laws before you place that next bet. If you're in one of those unfair states, you might want to think twice about gambling there. Second, start keeping detailed records of your gambling activities. Every session, every win, every loss, write it all down. It might seem like a hassle now, but trust me, your future self will thank you when tax season rolls around.